love the channel and find it useful in becoming a happy retiree. Subscribe today. Here we are in the twilight of another government shutdown. We will talk about what that means for markets. But before we do that, I want to get back into probably one of the biggest and most important arguments that I've seen in public recently on one of the financial news channels. And the reason I'm bringing this up today, because I think it's it paints a real picture on what so many Americans are confused about. So many investors are confounded by, where do we go from here? Here we are at the beginning of 2018. It feels like the year's it's barely begun. There's really not been that many trading days, especially if you're here in the state of Georgia, where kids have been out of school. It's truly been winter here in the Southeast. Feels as though the year has barely even started, yet the Dow's up 5.5% already. I mean, in some years, that's not a bad year. S&P 500 up 5.1%. Where do you go? How do you top that, or how do you follow it up? And again, on the eve of a nice reminder that Congress can't get along, can't fund themselves, can't come to an agreement, and here we are all waiting in the lurch, watching, waiting, what's going to happen, and we got these government shutdowns get taken care of. And really, I don't want to be anticlimactic about these government shutdowns, but let me just quickly go over that. And I want to get to this analyst war on CNBC. I'm going to play a clip. I play in the 9 o'clock hour for those new tuning in. It's a quick 2-minute clip, and I'll talk you through why it creates this really important debate, and I'll decode what these two heavyweight analysts are fighting about, really the direction of the economy, the direction of the stock market. But first, here we are, the government shutdown. We don't know when it's going to reopen. But remember, and let's go back and look at some performances. In a worst case scenario, we've seen this. You've got to go back into the 70s when there were a whole bunch of government shutdowns. The S&P 500 in 1976 was down 3.2% during a government shutdown. In 77, it happened again. It was down 3.1%. Ooh. In 1977, government shutdown, the stock market was actually up about a little less than 1%. If you look at 1982, government shutdown, market up 1.5%. 1983, market up almost 1.5%. 1984, government shutdown. These are government shutdowns and funding gaps. So there's kind of a combination of the two. 1984, government shutdown / funding gap, down 2.5%. So the reaction, and in 2013, we had a government shutdown, the market was up 3%. So these government shutdowns, they're very unnerving, and they're frustrating, and they're scary for investors. And as soon as you see, and this happened throughout this past week, when we saw the lack of progress, it kind of took some of the shine off otherwise very, very strong markets. So the market doesn't love it. It's not as though we rejoice on government shutdowns, but it also is absolutely not a market killer. And we've seen that for decades and decades, for 40 plus years, that it is not the item that's going to bring down the S&P 500. It's uncomfortable. We don't like to see it. I don't want to dismiss it. But historically, for 40 years, in some cases, markets have actually risen during these government shutdowns. Because remember, when the government shuts down, it has to reopen. Just like when we have bad weather, we have hurricanes, we have destruction, we rebuild, we have pent-up demand, government shuts down, has to reopen. Most of that money ends up getting spent, ends up being pent up. And eventually goes back into the economy. So that's why the stock market usually looks through these shutdowns. So as much news as we're going to hear about the shutdown, it is interesting, and we want our government to run, for goodness sake, it is not going to be a major component for equity markets. Hi, I'm Wes Moss, and thanks for taking a minute to hear about what's so different about my new book, You Can Retire Sooner Than You Think. So unlike other retirement books, this book will give you a step-by-step guide whether you're in your 20s or 30s or 40s or 50s, to learn from what these successful and happy retirees did to get there. I hope you enjoy the book, but more importantly, I know that it'll help you retire sooner than you think.